Hey, what's going on, traders? Welcome to this video. This is Chris at Virillo Trading. Thank you for joining us today. This is going to be another one of these trades of the week type of videos. In this video, what's going to happen is I'm going to show you one trade from the prior week that took place on September 16th, 2022. It was a Friday. And if you guys watched the video we put out last week, which was regarding framing risk management, on the thumbnail of that video actually shows the trade executions for the trade that I'm going to show you guys in the first part of this video. And I'm surprised no one asked about it, but anyways, I want to show it to you guys anyways, okay? And there's a good explanation in my recording of reviewing that trade that I think that some of you guys would enjoy listening to. It's just interesting, and it covers a lot of nuances regarding bond trading and trade management and execution. So that's it. The second part of this video, I'm going to cover my trading for this week. It's been a bit of a rough week for trading, for me at least. I mean, I kind of got a bit out of hand and I ended up trading a little bit out of my risk tolerance on Thursday. So what you're going to hear in the later part of this video is me reviewing my trading and basically sitting here and talking about my trading yesterday. I filmed myself yesterday after the trading session and just kind of, after reflecting a little bit upon the decisions I made and what could have led to me making these decisions. Now, again, nothing is perfect, and sometimes in trading it is very hard to really pinpoint what is truly driving your decision making, and that sort of buildup of emotion that can happen in the background after multiple days of trading. So you're not going to really get a perfect answer, but anyways, if you guys watch this video and you notice something about what I was saying in the video, if you watch the trade review later on, let me know in the comments what you think. Anyhow, hope you guys enjoy the video. Thank you for watching. Take care. 11 is the next level. And on the 10-year, it's what? 27, 29 half. $11 is all I could see, and then you have 11.75, which is that sort of. $10.75 back to 10 bid. $10.75 is a high. That's the problem here. There could be some buy stops above there, which can take us to 11.75 and higher. So really what I'm expecting is a really quick fill with edge here at 11 quarter, 11 half idea. But if it keeps doing this shit where it breaks one tick and fails, it's going to be bad. We shouldn't do that. Needs to be happening pretty damn fast here. 11 quarter, 11 half. It's this area here that is lining up with 10s. I'm up at 11 half, 6 ticks higher. I might not get filled. Just at the as the volume moves up higher, it's kind of looking ugly here. But 10.75. $31.5 is the next price. 11.5 on the offer. Let's see if I get something here.
Order has been filled.
Filled. It's still offered. 11.5. Okay, this is pretty much what I was looking for in terms of the area to be filled here. 11 quarter, 11 half. I'm not really expecting this to go above 12s. I'm expecting it to get caught up here at 11.75. So we'll see if it gets sucked back into 10s here. That's kind of what I'm expecting to happen. So far, so good. I don't know how far it'll go. I mean, it could reverse here and then end up at 9s, but also it could go to 12s. So that's kind of what I'm not expecting to happen. What I'm not wanting to happen is for it to go to 12s. I don't expect this to go to 12s, really, on the caliber of this move here. So I was filled at 11 halves. Now it's getting sucked back into 10s. Now, ideally, I would see I'm down at 9 quarters here. think the first signs of, well, 10s would be the first target technically. But it's also a tricky call. I mean, you know, there's also a good chance it reverses too, like just continues down here. So that's why I'm not putting that out of the cards, considering the context and everything. We could see a bit of chop around 10 though. That's the thing that I need to consider that as well. You could see they take offers at 10. Probably 10 is smart to take, but again, we'll have to see them try it. I mean, I really don't know if they're gonna hold 10s. You might chop 10 a couple times and then continue. So we have to pre-plan this a little bit. We have to be a little bit discretionary, but not too discretionary. So what I'm seeing so far is that 10 is bouncing the price. 10 is also somewhat of a poor low, and I want to see them try for 975 again. Again, so far they're bidding up here. They're bidding up, which is okay. I'd like to see them go back and trade 10 another time. So there's some more sellers. They go bid again. 11 quarters on the offer, 11s. Again, like we said, I'm not really expecting this to go above 12s. That was the original plan. So I think we'll just let it play out. See if it sucks back into 10s again. 10.5 bid. So we're back at 10s. We're sucked back into 10s now. And I want to see them how they trade at 975. Again, they keep rebidding 10s, but I'm not too convinced of them, I'll be honest with you. I think we have a pretty decent trade, and I think that it has the potential to hit our pretty not greedy target in this case. But I still want to see how they trade 975s here. So far, there is a sell signal here at 10. There's a sell signal if the bid drops below here. Let's see if they take it. Okay, 975s go through. If they go bid, do they want to trade this bid of 1,000 here? Some of it's pulling away. That's a good sign. Okay, good. Now we're here bid at 9 quarters. Let's see, we're trading 9 quarters and we're filled. Wow, we're filled on that at 9 quarters. Wow, guys. Well, that was an 8-tick trade there, and that made up for all of our nonsense of today. I think we had a very good trade location there. I mean, you could see how I was contemplating the entry. I wasn't so sure because of how long it was taking to get there, but again, as long, you know, the plan was there and we followed it, and that's what counts. That's what's important. Now, in regards to the target management, what I've learned from today, guys, is trading one lot is very, very hard, because you never really know. Like, there's certain scenarios where you just don't know what is going to happen, and you have to basically gamble. You have to say, okay, well, I expect this to break, or I don't expect this to break, and why. And then if it doesn't break, then you can end up with the trade coming all the way back to break even. Anyways, I'm pretty glad we had this winner here that made up for the 2 losses of earlier in the session, which were winners, by the way. Both those trades were in the money, at least 6 ticks apiece. So if you look at the first entry here, 375 short, We were in the money down to 2.25, so not quite 6 ticks, just about it. But again, I was expecting this market to go down here, and that's what was so tricky about this. Like, I didn't really know that it was just going to get caught around this little ledge here. So that might be something I'll be watching for in the future. You can even see here on the second attempt, right? So there's the stop out, and there's the second entry, because the trade was still valid, and it was all good, right? Market followed through, and I had my target at 1/2. I think even if I was at 175, I wouldn't have been filled here. Just by the amount of, I don't think it traded many contracts there. I mean, I could double check really quickly, but yeah, 175. Okay, it did trade about 700 of them. But yeah, anyways, it's just really tricky. It was really tricky because I was expecting them to kind of go through there, and it just looked as though it wanted to. But that 14.5 on the 10-year just wouldn't let up. I mean, and that's the thing. It's like when you're trading one lot, there's a limit to what you can do. You know, you can have targets at measured moves, but then if you have a setup that you think is offering you more, you're going to let it ride a little more. But then the thing is, if the market chops and it can't get through the area, you have to cut it. And that's the problem. It's when you decide, okay, when am I going to cut it? When am I not going to cut it? Whereas when you trade in more lots, like 3 or 4 at least, you can always get paid on one of them at a measured move, no matter what, you know, to make up for commissions, whatever. Let's say you've been chopping around or something, because it's only a quarter of your position quantity. Whereas with the one lot or even a 2 lot, it's a lot more discretionary. You have to develop a high discretionary skill. And that's why I think, I mean, maybe the reason why I've, become, I guess, pretty good at trading is because I've traded a one lot for so friggin' long. And obviously, if you look at the results, it's been pretty mixed overall. But the skills I've developed in the process of, reading the market and the context and all that are very helpful skills, I would say. Whereas a trader who just jumps right in and starts trading 2-3 lots and scaling in and out, they might not be as skilled in some of those management techniques. So yeah, that's it. But I mean, look at that top tick. I mean, whatever. That's hindsight. Like, I didn't know that my trade was going to be at the top tick. I had no idea. I didn't expect that to happen. I never expect that to happen because I just don't know what's going to happen. It's simple as that. I've admitted that a long time ago as a trader. Like, I really just have no idea. My plan was that, okay, I'm going to put my order in this general area. It was either going to be 11.25, 11.5. That was the general area. If you're looking for a fade back to 10 and you're playing off this sort of poor high area, sort of high noted area on the market context chart, which is around 11. And also was lining up with the volatility range. So it was like 11, and then I saw the way it was trading, so it was like 11.5. So as I put the order there, if I get filled, it should be a trade that has edge right away. If it doesn't, I'm going to give it a few seconds because it can continue to 12. If it continues to 12 and starts holding the bid there, I'm definitely wrong and I get out. But in this case, it held there, and we did get that fill with edge that we were expecting, that we had planned for, and the market did follow through. Now, this move right here, you see, this is a move that would have stopped out many beginners that are not totally solid with their plan. The market will come back down, bounce off the point of control, whatever it is, and it can bounce, but the level is still valid. The trade is still valid. There's no reason to get out. That's the way I play it personally. Like, I'm not going to be taking a break even here because there's a very small chance that if I get out of this and try to re-enter it, there's a very small chance I'll be able to get back in with the same price. And the market will just move too fast. It will not happen. So you don't cut those break even, okay? You cut them for a loss. Maybe a loss smaller than your stop loss, but you don't get swept out on break evens like this. Same down here, okay? I was contemplating it here, I'll be honest with you. During this area, I was really contemplating, all right, what the hell is this market doing? It's waiting for the stock market to open. The market opens, nothing happens. So I'm like, okay, I'm going to stay in. There's nothing going on here. The level is still valid. Fours are still holding. This is one thing about bonds that I learned, is that if you're playing off a level and it's still valid, stay in the trade. You can get a stop run. That's the problem. Sometimes the longer it chops, the higher the odds it gets a stop run. Thing is, you get the stop run and it's right back in here. You have to re-enter the trade. You have to get back in. That's what I did in this case, and it worked. And look at that break-even test right there. You see, a trader that doesn't know their plan, a trader that is not solid with their initial plan on the trade, that's letting their fight or flight system take control of their emotions and all that, and you're letting your emotions basically drive your responses, your reactions. You're gonna stop out on this. You're gonna see this. You're like, oh my god, it's come back to break even. Let me get out, right? And you're gonna just overmanage it. You can't do that. If the setup is valid, the setup is valid. You stay in the trade and you let it play out. The market will give you more information about the setup. Now, of course, no one's perfect. Look at me. I'm letting all these trades come back to break even, right? This one, look at that break even test too. Held it, came all the way back down, right? The level was still valid on this. I guess I should have talked about this one before that one. But yeah, perfect break even test right here. I didn't stop out because that's not what I do. The general consensus of it is that when the setup is still valid, you don't take break-even stops. That's it. Okay? Unfortunately, none of these played out. This was dangerous right here. This fucking poor low over here is bullshit poor low action. I should have got out. And I know it's one of my rules in my trading plan that I do not bet that poor lows are going to break. Now, the thing is, I've leveled up a bit, and now I'm a little more, aware of the context. And there's scenarios where I would say, you know what, I think it's going to break. I'll let the trade go, and I'm going to see if it's going to break. If it does break, I think it's going to run another 3 ticks, which is fine, right? But then you get these scenarios where you got a poor low like this. You're in the money 4 or 5 ticks already, and you have 2 choices because you're trading a 1 lot. It's either going to get paid on it for better than your 1-to-1, and you're going to get your measured move, which is the proper thing that you should be doing as a disciplined trader, trading a 1 lot, or you're going to gamble and try and let it ride. And then, of course, if it holds the poor low, it's going to end up right back at your break even, or you're going to stop out because you're stubborn. So you're going to let a trade that was a perfect 1-to-1 risk to reward, a perfect 1-to-1 or 1.51 in this case. If in this case the worst, so say I'm short at 75. The market's holding at 2 quarters like this. I'm seeing a quarter. Probably the worst possible fill I would have got on an exit is about 75. I could have tried for halves, right? That would have been more than a 1-for-1. That would have been good. Again, I'm speaking in hindsight here. I'm just saying, like, how can I manage this in the future trading on 1 lot? What will be the plan? Do you stick to the plan, let it come back to break even? But the thing is, this is the tricky part. You can accept the break-even test, and then when it comes down and it's doing this for 3-4 bars, that's really the hard part because you really just don't know. In this case here, I have no idea if it's going to hold or not. It looks like it's holding, and then of course if it doesn't hold, it's going to go 3 more ticks straight to where my target was, and then I'm going to say, why didn't I hold at the target? And then there's a whole, it's like one problem to the next. So you have to have a plan. You have to know what you're doing. You have to know how these exits impact your overall long-term expectancy. In general, as long as you're getting more than your risk, you're okay. In general, assuming that your read on the market is good and you have a decent, win rate, of course you're looking for more than that, but the minimum has to be at least your risk. And if the market's doing this, giving you mixed signals, again, it's a hard one, right? Because this was my first trade of the day. I'm looking for it to run. We had a good entry, break-even test, coming back in, chopping. And if you look at the 10-year during that moment, right? It was right around here. This was the stop run. It was right around here where it just wouldn't let up 14.5. That's the fucking major issue, man. The 14.5 thing right here. That's what I was watching for a break, and I was looking at it, and I was so convinced in the moment. I was looking at the chart, and I was like, that 14.5 has to break. Like there's something about. I kept repeating to myself in my head. And I convinced myself that, you know what, I think 14.5 is going to break. I think it's going to break. I think it's going to break. And I kept repeating it over and over and over again like a fucking broken record. And what do you know? It didn't break. It never broke. And I ended up with 2 trades break even that were easily 4, 5 tick, 6 tick winners. So that's what you get, right? I had a bit of a red week. And one thing I want to say to start is that every time I have a bit of a problem in my trading, which is very rare, by the way. I've been doing quite well for quite a while, but Today I messed up. I traded a little bit outside my risk tolerance and I paid for it. I felt it. I felt the emotional imbalance. I felt totally unregulated after that. And I just, I definitely had to take some time to meditate on it and definitely make this video for you guys to so you can get an idea of what things are all about. I kind of stay away from trading the stock market when the Fed is talking. Bonds were kind of in a slow period before the Fed, and the Fed sort of woke them up a little bit in a good way for about a few hours. But after that, I don't know. Today was a bit of a sketchy day. I didn't really like the action. Early on, the action was good. My best trade of the day was the first trade of the day today, Thursday. And after that, it was all downhill from there. I believe I've been trading pretty well. I've been managing my risk very well. But one thing I got to share with you guys is that there has been, I believe that I've built up a little bit of frustration since the beginning of this week. Monday was dry, Tuesday was dry, Wednesday was dry. I don't even think I traded Monday, to be honest. Honestly, I looked at the market Monday. I think I probably got up not exactly super early, and I was not impressed with what I saw, so I didn't even place a trade that day. Tuesday, I got up early and I traded. I think I had one trade on Tuesday and it was about a 2 or 3 tick loss. And the market was very slow. The volatility was very non-impressive. And I just said the hell with that and I'm out of there, right? The market looked like it was waiting for the Fed. That was this day right here, the 20th. You're looking at the chart for the 5-year treasury note futures, okay? All right, now then Wednesday, fast forward to Wednesday, the market was very slow awaiting the Fed. And then it just consolidated for the rest of the session, nothing interesting. And then, of course, you had this insane, volatility right on the Fed. Now, honestly, during this volatility here, I had some really good reads on the market, but I wasn't able to execute any of them. I just wasn't prepared enough. I wasn't confident enough. I wasn't prepared enough for that volatility, for what we were seeing. And I just wasn't ready for it. I didn't execute. Now, if I look back at my recording, my voiceover, I was saying the reads out. I was saying, okay, we're doing 7 tick rotations, and I think that it's probably going to rotate from this area. Then I was watching how it moves, and then sooner or later, boom, the market rotates 7 ticks back exactly where I was expecting it to rotate from. And that happened at least 3-4 times. If I would have landed at least one of those trades, I would have paid for the entire afternoon, probably the entire week of trading at this point. But I didn't. I wasn't ready for it. It's okay, right? So that's one thing I want to point out. Is that a lot of traders, they beat themselves up when they don't hit certain trades. Like they say, oh, you know what, I was talking about that trade and then I didn't hit it. Well, why didn't you hit it? You have to go deeper into that analysis. Honestly, I was honest with myself in that moment after that session. I looked back on the session and it was very clear. I said it out loud. It was very clear to myself that I was not well prepared enough to trade that drastic shift in volatility. That's one thing. The second thing is my indicator on my screen was not well adjusting to the drastic shift in volatility. I would say my indicator works very well during normal market activity. It can adjust pretty well to what the volatility is doing, but it really, the Fed announcement really blindsided it, and my indicator just had no idea what it was doing. I think it was predicting something like 15 tick rotations in the 5-year, which was way too much. It was not moving that much. It was moving about 7 to 11 ticks roughly rotating, and those were nice rotations if you caught some of them. If you did trade those, leave a comment. I doubt you did, but leave a comment. None of you guys trade bonds. You guys trade stocks. You're a bunch of gamblers. I'm the biggest gambler because I lost fucking money going 2 times on my size today. And I believe that was a good setup. Anyways, we'll get to that. So what I was talking to you guys about first is that I was not well prepared, not confident enough to execute those trades. Just because you see the trade playing out, it doesn't mean that you have the confidence in the setup to actually put the fucking trade on, and ride it out. I did end up putting a trade on Wednesday, and that was a lower quality setup. Towards the end of the session, it was a 7 or 6 tick stop out. And the reason for that is because that's how much the volatility was. My indicators adjust to the volatility. In this case, the stop had to be about 6 ticks. Actually, I ended up getting stopped for 7 ticks on this particular trade. So nice 7 tick loss right there. So whatever, market chops, goes down, and then that was it. That session's over at that point. I wasn't looking at it anymore. The market continued lower, chopped, and that was it. And then I looked at this move right here. Okay, the market's now recovering. I probably got back to looking at what the market was doing around this time after eating food and all that. And this is where the kind of shitty stuff starts. Market continued lower, chopped, came back up. In this case, again, now here's me looking for a short trade now in this area. And this is the area here that I sized up in. So I went double my normal size. And this is kind of a mistake. This was a mistake because I know for a fact that I'm not comfortable taking $100 stops. I learned that the hard way today. They're not $100, they're about $80, but anyways, I round them off just to kind of get that mental round number. Like, how do you feel about taking $100 stop losses? Even if it's an A+ setup, you know, relative to your account size, relative to your bankroll, your income and all that. You know, there's so many factors that can come into play when you're trading, guys. That's why I believe that anybody who trades needs to have some sort of income, consistent income, or a big ass bankroll. Again, maybe some of you don't agree with that, but I believe that some of that mental clarity that you need for trading comes from you having consistent income, that you're not worried about the money that you're risking in the market. You're absolutely comfortable and fully accepting of the risk you're taking. And that's why you don't have to move stop losses unless that's part of your management strategy. But first, personally, I don't move stop losses if the trades are not reaching my targets yet. And that's a mistake I made probably on that first trade there, on one of the trades I showed you earlier. This is a trade where I got top ticked. Anyhow, it happens. You know, fucking noon, right? This is a story with this trade right here. So I'm playing on a reclaim down. I'm expecting this market after this amount of chop here to get some one-way action, a bit of a one-way show to the downside. And that's kind of what I was playing on. Now, I was missing context. I believe I was missing context here. There was a 1 p.m. bond auction. I don't know if it was a 30-year bond auction or something. It was some kind of an auction at 1 p.m. And stubborn me, I didn't have any news on my screen. I didn't know shit about what the news was. In fact, I haven't had news on my screen all week. I've been really stubborn about that. That the fact that I try not to look at no news, nothing. But there's a difference between news and actual planned economic events, like treasury auctions. And that's something I fucking forgot about. Big time. So probably this trade alone right here, you know, taking $100 stop out on this fucking bullshit, is enough for me to say, all right, I'm never going to trade without the economic calendar on my screen, or at least on my desk somewhere. I'm never going to trade without it anymore. And of course, you got to lose the money, lose the real money to actually, you know, implement that. And of course, you know, I've always been sort of mixed about trading the news, and I realized that watching news or having news on my screen while I'm trading, especially scalping treasuries or even stock indices, like, it has nothing to do with my strategy, first of all. The only thing that the news can provide me is context. Context about something that's going to happen at the top of the hour, or something that the market is expecting, right? Or something that can affect the market sentiment. Context, right? So the news itself is not helpful, but the news being present is part of the context. It's important context for the market. And of course, you know, I neglected that, and now I'm not going to neglect it anymore, logically, because when you lose fucking money in something, you know, all of a sudden the switch goes off in your brain. So here's this fucking bullshit right here, right? So I entered the trade here, and then it's just chopping. 1 bar, 2 bars, 3 bars, 4 bars, chopping. My stop is up here at 31.5, above these poor highs. Well, kind of right near the poor highs, I would say. But kind of in the area where I'm not expecting it to go. I mean, when you get this much chop, and then a break of the poor high, hold it, come back in, go to the other side, I'm expecting that to follow through personally. I mean, that's a setup I would trade. I believe that's an A+ setup under regular volume conditions, regular order flow, you know, in good flow where traders are actively looking to participate. I think this is an A+ setup. In this case, 1 p.m. with a bond auction in 4 minutes, probably it's not an A+ setup anymore, right? And that's where the context makes a big fucking difference. So anyways, the fucking buy stop is at 31.5. And here I am, you know, sitting in this trade, and then it goes and actually goes in my favor, probably 2 ticks for like about a split second. Those bids pull and then slams up in a millisecond, stops me out, and then comes back in. It's like, all right, that was kind of fucking bullshit, right? And I was like, all right, that's pretty annoying, right? And then the markets, you know, after that, right, 1 minute after, you can see we're just chopping right back here, 30.75, 30 half, 30 half, 30 quarter. And again, I'm expecting 30 quarter to hold bid. So I stop out on that on 2 lots. And of course, you know, at this point, you're gambling, so you might as well just gamble again, right? There's the gambling mentality coming out of you. The thing is, what if it doesn't work? You're going to pay another $100. And that's exactly what I was willing to do in that moment. Take a 2 lot short, the same exact short, 30.25, stop loss, same exact location. And what did it do? I entered the trade here on a sell stop. Again, it's a specialized sell stop. It's a sell stop that I can't get slippage, whatever. I'm not telling you how it works. And what happens is the market chops, goes, chops, and then it starts to come back and fade. And the 29 bid on the 10-year was holding. That was one thing. Sorry, maybe it wasn't 29. I'm not sure exactly what the price was. Anyways, that 26 bid on the 10-year was holding after this. And I was like, all right, this is kind of bullshit. So we come back in. And there's either two things that are going to happen. It's either going to continue to grind and stop you out, or it's going to get caught up here, stop out more shorts, weak shorts, and then it's going to continue after. Which happens quite frequently in the bond market, by the way, and that's why I don't really move stop losses. I'm not a fan of moving stop losses to break even, because you'll easily get picked off. Easily. Anyhow, so the market followed through higher and I stopped out, which is fine. I took my stop out where it was supposed to be taken based on the plan that I had constructed for the trade. I followed the plan from start to finish without any fucking noise, any hesitation. I did my job. All right. The only thing is the trades didn't work and I sized up double, and I'm not comfortable with the risk of $100 stop. After taking a $200 loss like that, that's probably the biggest loss I've taken trading futures in quite a while. So for me, taking a $200 loss on 2 trades like this is, it's quite a lot. I mean, like, I'm a broke motherfucker. What do you guys want me to tell you, right? This is why it's important, guys. Don't base your trading on what other traders are risking and what other traders' bankrolls are, right? If you see traders that are risking with fucking $500 stop losses, you have to really be honest with yourself and ask yourself, like, look, if I lose $500 in a fucking millisecond, because that can happen, by the way, how is that going to make me feel? And even asking yourself that, you might not even know the answer. You can make up anything in your head. You can make up so many scenarios. Nothing will compare to you being actually in that scenario of taking a fucking $500 stop loss or any stop losses outside your actual risk tolerance, right? It's not really about the money, but it kind of is, because once you trade past your risk tolerance, all of a sudden you start thinking about the money. And the thing is, to trade properly and consistently and follow your plan and not give in to tilt and FOMO and all this shit, you cannot be trading outside of your actual risk tolerance. So here's an example of that, right? I take the trade, enter it again, stopped out, and then I'm like, all right, I'm done. Like, I'm already way past my loss limit on the day. I'm fucking done, right? It's fine. For that, maybe it would have been a good setup to just fucking buy stop in, because in reality, I knew very clearly I was going to be wrong if the market traded there again. So probably would have been a good reversal setup. Thing is, I had lost way too much money at that point to continue trading. That was my trading week, guys. It's not always pretty roses in the sun. As you can see, trading is fucking hard. The one thing I want to say again, reiterate this, is that whenever I fuck up in trading, whenever I do something that makes me double think about what the hell it is I'm doing, or that makes me like borderline consider like, okay, what the fuck are you doing kind of thing, it always makes me think back to the trading industry as a whole. And because I can see things from the perspective of a content creator, because I make YouTube videos and I see the other people that make videos in this space. I don't really care what other people are doing, but at the end of the day, that's the industry we're in, and it's the industry where people are out there, telling you trading is easy if you buy their course, and that they use this platform, marketing for this fucking combine, for this platform, all that shit. None of those things are going to help you become consistent, in my opinion. First of all, you have to have setups. If you don't have setups, you're nothing. Then after that is you have to learn how to manage your setups and how to trade your setups and how to manage yourself around your trading, which is probably the most important thing. That this is why most people fucking suck, because they can't manage themselves. And it doesn't happen in one day. It's not like one day you take a loss and the next day it's over. What happens normally is you're chopping your P&L for 2, 3, 4 days, and that builds up, and that results in you being less efficient on your exits and entries and your setups, and results in you taking lower quality setups just to test things out because you're bored. And that's one of the things about bond trading, right? So every market's different. One thing I noticed about bond trading, I like the way the bond market trades. I think that they have very good quality opportunities. Not a lot of times. They're very rare opportunities, but they're there. There's a few of them every single day. Thing is, I'm trying to get better at sifting through the noise and waiting for those setups. And that's been quite hard. Because it's very easy when you're back and forth in your P&L for a while. All it takes is you to slack on one trade, especially if you're a one lot trader like me. Trading a one lot is fucking hard. It's way discretionary. 2 lots is almost the same thing as 1 lot. It's very hard and it's very discretionary because there's moments where you just don't know what the hell is going to happen. And that's one thing about bonds, is that they can be very fucking random at times. I have no idea what's going to happen. It literally looks like there's just market makers just scalping back and forth, and I'm looking for this move of 4 or 5 ticks and it's just not happening. But then it ends up happening. In the case the trade plays out, it ends up happening, or I get stopped out, and that's the end of the fucking story. Anyways, I got some work to do, guys. I tried to keep this video nice and short and sweet for you guys. Hopefully you learned something, and let me know down below what you think. Thank you for watching. Take care.